Okay guys, welcome to another little breakdown. I'm just going to be posting this for fun, for the love of the game. Okay, let's just get straight into it, yeah? So, this trade, right, I didn't actually take it because I wasn't filled in, but on the DXY, it was filled in. So anyway, I'm gonna go through this trade as if I actually did take it, but you'll understand what happened basically and how I can actually capitalize off of it next time, okay? So anyways, this is a very repeatable system and strategy which I'll show you. Let me just delete all of these drawings. Okay, so where did the day start off? Let's mark out Monday. Yeah, so Monday was over here. Yeah, all right. So now we have that marked out. Let's go to the monthly time frame. I always love to start on the monthly. Yeah, so on the monthly, what can we see? We can see that for the most recent price action, we've swept this low right here, okay? We've induced this low. So what do we want to see now? We want to see the next point of liquidity met, which is basically the draw on liquidity. So the draw on liquidity would be over here, this fair value gap on the monthly, okay? So we know that we want to look for price to go higher. What can we also see? We can also see where price actually is right now, that we're trading into a monthly gap. So there's a monthly gap right here, okay? So we know that. So we know that price can react from it, right? So now we go to the weekly, yeah? Bear in mind, look at this line. We want to look at price before that because, that's what we was looking at. So we come in here, we tap a weekly order block, and we're in the monthly gap still. Now we don't need to worry too much about the weekly, but yeah. What can we also see? This is our short-term draw. So we don't want to target this monthly draw because you never know, we can get just swept out, and then it can go to the draw later. So we want to target a short-term draw, which is this weekly DOL, and we want to see this weekly candle print to that DOL, if that makes sense. Okay, that's our weekly objective essentially. So flicking back to the daily, yeah, like what kind of plan can we make? We can make a plan, right? An execution type of plan for the week, because we're going to be trading you know based on the weekly expansion. So on the daily, can we see any PD arrays? We can't really see much, can we? And we're on the DXY, which is the proper, good analysis pair. But yeah, there's nothing on the daily that much. So what do? I go to the 4 hour, okay? Pretend that there's nothing here, alright? Because we can't actually see price action. If there's a way to cover it up, I will. Let me see. Pretend that you can't see any of this because I couldn't see it at that time, alright? Oh shit. Let me just boom, bring forward. That should do it. All right. So at this point in time, right, on the 4 hour, I'm expecting price to deliver to this draw, right? Remember this weekly fair value gap, yeah? Remember that weekly fair value gap. I want it to go there. That's the weekly objective. I want it to go there. So what am I gonna do? I'm gonna plan something, basically an outlook, so I can take the trade. So price is here right now on Friday or Sunday. Yeah, my outlook for the week is that. Well, first of all, let's mark out the PD arrays. What can we see? 4 hour OB right there. Beautiful. Okay, that's a 4 hour OB. Let me just put the opacity down. That's a 4 hour OB right there, which we can anticipate a reaction from. Okay, we can anticipate a reaction from. And there aren't really other PD arrays, are there? There's a fair value up there. I had that marked out as well, but this OB mainly, just because I like how it looked from the context and my experience and discretion, I guess. Okay, so from here we can see that what does price do? Price opens up on Monday. Okay, and by the way, remember, we want to stay on the 4 hour. Why? Because we're trying to trade in line with the weekly candle, so we have to stay on the 4 hour. Anything else, if you go on the 1 hour, that's just noise. It's gonna, it's not gonna show us true displacement. We want to stay on the 4 hour. So what do we see? We see that price actually trades into this OB on Monday. Now on Monday, we don't know if it's going to react from it. It could react from this OB, from this OB, from this OB, from any fair value gap. We don't know. So what do we want to do? We want to wait for the low of the week. We want to wait for displacement. So once we see displacement, all displacement is, it's literally just fast, efficient price action. Okay. So all I wait for specifically, yeah, is, it depends on the context, but in this context, I just waited for this literally 4 hour inversion of that gap. That's it. Once I saw that broken and disrespected very, very nicely, then I didn't just execute here. I waited for the next candle to form and see if it would actually print a fair value gap, okay? Because if it does do that, then I know that we're actually, you know, we're actually going to drive higher. You know, we're disrespecting bullish bearish PD arrays, and we're creating bullish PD arrays. So this shows intent for higher prices. So at this point in time, yeah, let's just flick back to the Euro USD, yeah. This is where price was, okay? So it created and inverse this 4-hour gap. At this point in time, I had my limit here, okay? I had my limit literally over here. So I was just waiting to get tapped. I had my SL at the invalidation, and yeah, as you can see, we did not get tapped. But on the DXY, we can remove this black box now, if it wants to go. As you can see, it does get tapped, yeah. But because I'm in the UK, look at the timing. The time that it got tapped was at 1 AM. It was literally at 1 AM. So I was asleep at that time. I just had limits on. However, if I did see that the DXY tapped it, I would have entered manually. But obviously, you know, what can we do? You know, what can we do? But now I learned that I can just manually execute. So instead of just, you know, waiting for that tap, if I'm leaving it overnight, I can just manually execute. And yeah, so what I should have done, or what I would have done, or what the preferable setup would have been, was this, and then my stop loss at invalidation. And what is invalidation? My invalidation is the low of the week, okay? So low of the week is literally over here, low of the week. Alright, so my SO is there. And then simply remember, I want to always target the draw, okay? Now in this case, the DXY didn't tap it, but over here, let's look on EU. EU, let's say I took the trade short. This is what most people did. They just literally market executed, because, you know, not always will you get tapped from the limit. In this case, I didn't. And yeah, look at the draw, by the way. The draw is over here. Don't worry about this. This is just for current price. The draw, remember, the weekly fair value gap. We don't want to target for home runs over here. We know later on it will go there, yeah, but we just want to target in and out of the market. You know what I mean? It's more high probability. So the next draw was this weekly fair value gap. All right. So that's exactly what I targeted. As you can see right here. Okay. And also there was another scaling, all right? So the scaling was over here. I'm going to go through this part quick because it's quite advanced. So we tap into this, we create our new high of the week, or you know what I mean, after that OB is created, and then literally on the hourly, let me find it, literally manual entry, wait, let me see, manual entry over here, stop loss above here, TP to there, and FOMC gave us the TP. As you can see, beautiful, beautiful position, repeatable, happens every single week. And yeah, now this is not the only thing that I wanted to show you guys, but 1 second, bear with me. Essentially, what I wanted to explain was the weekly candle anatomy, alright? The weekly candle anatomy. I know that sounds weird, but just hear me out. Hopefully this will make sense for you lot. So essentially, here is Monday, Tuesday, Wednesday, Thursday, and Friday. Let me just draw that. Where's my drawing tool? Guys, make sure you are actually listening to this, because trust me, it's sauce. Bro, where's the pen? I've never ever used a pen, I don't think. Pen. Oh, brush. Yeah, so look. Just, oh my god. Briefly, yeah. That's a M. Tuesday. Wednesday. Thursday. Friday, yeah? Alright, so that's a W. Alright, so basically, as we can see, how do candles work? How are candles formed? Price always opens, right? This is the opening price of every single candle, yeah? And then what does it do? It always moves lower. It moves lower. Okay, let me just remove Let me remove the middle line. It always moves lower first, and then let's just say it wants to be a bullish candle. What does it always do? It opens here. This is the opening price. It comes low, okay, and it creates the wick. So this is the lowest point it went. It creates the wick, and then after that, what does it do? It goes high, because it's a bullish candle. It goes high. It goes really high, and then it creates the highest point, yeah? And then the body closes. This is the close right here. This is every single candle. Do you understand? This is the open, lowest point, the highest point. The highest point is up there, and then this is the close. Okay, this is same for bearish candles as well. You guys should know this. Open, high, low, close, or open, low, high, close. Does that make sense? So this is the open. It goes the lowest. This is the lowest point. It goes the highest, and then it closes. Same for bearish. Let's just say this was bearish, yeah. In fact, I'll turn it red. Let's say this is bearish one, yeah. So it opens here, goes the highest, comes all the way to the lowest, and then closes here. All right. So now let's implement this to the weekly anatomy, or whatever you want to call it. So first, price will open here. Look, we're gonna go along this, yeah. Price will open here. Now, typically, not always, but typically, what it will do on Monday is range. Okay, it doesn't have to be consolidation. That's not what range means. Range means setting up liquidity for the rest of the week. Okay, so yeah, understand that. Now, Tuesday. What does Tuesday do usually? Typically, Tuesday. Let's just go with this. Yeah, it's a bearish week. Tuesday typically sets the manipulation, or the high of the week. Okay, so it sets the manipulation, right? Manipulation as in, my bad. Manipulation as in, it will tap into some PD array here. It will sweep liquidity, and then it will displace a bit. Okay. Once that displacement is set, the high of the week is set here. Okay. Now, once the high of the week is set, what can we do on Wednesday? When Wednesday rolls around, once the manipulation is set, this is our high of the week. Our invalidation is here. If it goes above here, then we know that we're incorrect. On Wednesday, what does it typically do? Typically, it's distribution. As you can see, it's literally AMD. You can call it whatever you want. Open, high, low, close, AMD, PO3. It's the same thing, as you can see. Accumulation, manipulation, distribution, okay? And then Thursday is usually always just a continuation of that distribution. And then Friday, usually, it either continues or it reverses to the mean, okay? So it just comes back, essentially. So as you can see, this is the weekly candle anatomy, alright? And this happens literally every single week. If you master this, then you can literally print off the market every week. And I'll show you it in action for this current week and how we traded it. It's quite hard without replay, but I'll try my best. So essentially, I'm gonna have to redo all the analysis. Essentially, what did we want to see? We wanted to see price come to this weekly objective, right? Yeah, we wanted it to reach this weekly objective. And remember, price always has, if it's a bullish candle, it has to create an open, low, high, close. So what did it do? Should we go to EU instead? What did it do? Price. This is Monday, okay? I'm gonna mark out Monday. Monday, yeah. Remember, open, high, low, close. Open, high, low, close. So Monday opens over here, approximately. Comes up, creates a high, manipulates into this 4-hour OB, displaces downwards, creates the high of the week. We get in line with our position. We target the objective. It's as simple as that. The high of the week was here. Now, obviously, it got swept later on, but that doesn't matter because we came out of our trade and we took the objective. Price create the high of the week because of the displacement. We entered our trade over here. Stop loss at invalidation, and then targeting the weekly objective, which was that weekly gap, remember? Over here, which it took. It's as simple as that. Happens every single week. Every single week, day in, day out. And by the way, it doesn't just happen, it's not just a weekly candle anatomy. It literally happens on the daily as well. You can literally know every single day what will happen on the daily time frame. For example, today, I didn't take this because it was low probability, but every single day in London session, that will usually create the low or high of the day. As you can see right here, this was today. Manipulates into this 4-hour gap, okay? Let's go to the 1 hour. What time is it? 7 AM, London session. What does it do? taps into a 4-hour gap as we just marked. We sweep this liquidity, okay? We start displacement. What's displacement? It's literally just creating fair value gaps at order blocks. As you can see, created an order block, created a fair value gap. Alright, simple as that. So we know this is our low of the day, this low right here. So what can we do? We can enter our longs, stop loss at the low of the day, target the draw. It's as simple as that. Happens every single day. Make sure you guys do your studying, and hopefully this video was helpful for you. But yeah, on to the next one.